Ramanathan. Mr. Ramanathan is Acting Assistant Secretary for Financial Markets in the U.S. Department of Treasury. He serves as Senior Advisor to the Secretary, Deputy Secretary, and Undersecretary on extensive matters. Mr. Ramanathan also serves as the Senior Member of the Treasury Financing Group. In addition, he oversees the Office of Debt Management and the Office of Government Financial Policy, as well as the operation of set commissions and board staff. While he started working at the Treasury Department in 2005, he began his current position in 2006. Welcome, sir.
Thank you. Chairwoman Velasquez, Ranking Member Chabot, and members of the committee, thank you for this opportunity to testify this morning. Small businesses are crucial to the health of the U.S. economy. They provide the entrepreneurial talent that keeps the economy flexible and dynamic. Small businesses employ over half the U.S. workforce and are estimated to generate 70% of all new jobs. Thank you for the opportunity to address this timely topic and stress the importance of this sector. As the Acting Assistant Secretary for Financial Markets, I serve as a Senior Advisor to the Secretary, Deputy Secretary, and Undersecretary on broad matters related to domestic finance, financial markets, including the federal debt. My office is also responsible for the issuance of over $5 trillion in annual debt and for overseeing the $10 trillion U.S. debt portfolio. As you know, the economy is currently working through a prolonged housing correction that has impacted credit markets and financial institutions. The downturn in the housing market, as well as financial and credit market pressures, have negatively impacted the real economy. Small businesses and consumers have also felt the headwinds as employment, capital investment, and consumption have declined. Community banks, thrifts, and credit unions are vital components of the financial markets, and ensuring their health helps to encourage the lending and borrowing activity that is critical for small businesses and consumers. To alleviate credit market strains, the Treasury, the Federal Reserve, and the FDIC, along with our international counterparts, have taken unprecedented and extraordinary steps to address the current financial crisis. Steps aimed at strengthening banks' balance sheets, easing strains in the interbank lending markets, and provided needed liquidity. While the long-term economic prospects of the United States are solid, the United States, as well as the global economy, faces considerable challenges in the near term. The slowdown has affected nearly every sector of the U.S. economy. Small businesses have also felt these strains. And when small businesses suffer, the rest of the economy does as well. Let me just cite a few examples. Small businesses in the retail and restaurant trade sector, which represent 90% of all such firms, have been particularly affected by recent economic conditions. The retail sector is estimated to have lost over 250,000 jobs in the past year. The home construction industry, where small businesses make up 80% of firms, has also particularly been affected by declining home values and credit market conditions. Equipment manufacturers, so important for small businesses, have also reported large declines in new orders, capital spending, and technology investment, and are drying up as a result of the liquidity. These businesses are less able to obtain loans and even meet payrolls at times. The global financial crisis and tight credit markets have made it harder for small businesses to borrow the money they need to meet their payrolls, create new jobs, and invest in the future. As the son of a first-generation Indian-American engineer who has been building electrical and power generators across the United States for the past 40 years, I have a particular insight into the difficulties facing small business. I hear stories about orders for new equipment and contracts for new engineering investments slowing dramatically. This illustrates stories we are hearing firsthand and reading about in newspapers, in which your committee is well aware. To counter these difficulties, Treasury has applied the authorities Congress provided to stabilize the financial system, which will provide the flow of credit while protecting the taxpayer to the maximum extent possible. We've opened our capital purchase program to smaller community banks, which interact on a day-to-day basis with small businesses. Importantly, many of these privately held institutions have strong, long-lasting ties with local businesses in your communities. By providing capital to such institutions, Treasury is directly assisting small businesses so that they have an ability to make loans, mitigate funding pressures, and promote growth locally. In addition to providing capital directly to banks, we are also examining strategies to support access to credit outside the banking system. With the Federal Reserve, we are exploring the development of a liquidity facility for highly rated AAA asset-backed securities. Such a facility could lower costs and increase credit availability for consumers and small businesses, and I'd be happy to talk about that. Addressing the needs of the securitization sector will help get lending going again, helping consumers and supporting the U.S. economy. It will take time for the measures we have taken to have their full impact on an economy in which many consumers and businesses are struggling, but we have seen some encouraging signs. Treasury is mindful of the challenges and difficulties affecting the small business community. We will continue to focus on stabilizing the overall financial markets and reestablishing the flow of credit so that small businesses, consumers, and all Americans can more easily obtain credit. Thank you for this opportunity to appear today, and I'll be happy to take your questions.